After another week of downward pressure on both AMC and GME, a host of other issues are now peeking around the corner and taking aim at the broader market. The jobs report this week pointed to more Americans re-entering the workforce, which is great news in terms of recovery. However, with more people returning to work, it is expected that their monthly wages will increase and their average spending along with it. The jobs report beat and potential for more spending is leading analysts to think that inflation might onset more quickly and force the Fed to begin tapering sooner rather than later. I warned before that tightening to get inflation under control might be a trigger for a market correction, but also have an effect on stocks that are heavily shorted like AMC and GameStop. Let's talk about some announcements from the Federal Reserve. Let's see what the SEC said this week, and let's get to it. What's up YouTube, James from Thursday Media here, and in this video we're talking about AMC and GME and some announcements that were made this week that may affect them both. The Federal Reserve put out a statement on August 5th raising the individual capital requirements for large banks to $1 trillion. This change in capital requirements is for banks to be prepared to continue lending in the event of a severe recession. In case you missed some of those discussions, the stock market is very expensive at the moment. Finding value stocks is becoming harder and harder, and all it takes is looking at some simple metrics such as PE ratios to see that most stocks are overvalued. Long-term value investment firms such as Berkshire Hathaway have been net selling the last few quarters due to the difficulty of finding deals on stocks. It is one more indicator that the market as a whole remains very expensive. The Fed is sending a clear signal to banks that preparations need to be made for recessionary times. Now is a good time to really start reviewing what stocks you hold if you're managing your own portfolio. Remember that the market has been propped up by leverage, and a ton of it. Once the Fed begins tightening their monetary policy, this will likely trigger margin calls and a market correction. Stocks that are heavily shorted on margin may move to the upside in this scenario. The market is sitting in a unique position where the index numbers keep going up, yet we see troubling signs all around us. Of course, that hasn't stopped investors from continuing to buy into the market, especially as earnings this quarter seem to be decent. AMC and GameStop, though, have cooled off for the summer, but many are beginning to look at them as the go-to stocks in preparation for a market correction. We've also finally gotten word this week from Gary Gensler, chair of the SEC. Apparently, the SEC is paying attention to the AMC and GameStop situation, specifically the routing of retail orders through dark pools. In a CNBC interview, Gensler was asked about disclosure, and while the conversation was focused on cryptocurrency, the question pivoted to meme stocks and retail investors. His response was that the SEC was looking very closely at market structure, and that so many of our orders, retail public orders, are not going to the lit markets, but are going to internalizers, going to wholesalers. But to me, there's a fundamental problem with this statement. The SEC is admittedly watching retail orders being routed through dark pools en masse, yet Gensler stopped short of saying that this is market manipulation. To me, it's more of an indication that the SEC knows something is wrong, but we will not likely see any action in relation to it until well after this rally is over. Whether retail wins or hedge funds, it would be surprising for the SEC to take any kind of action in the near term. If we think about it, the only reason Gensler and the media are even talking about these irregularities in the market is because retail investors refuse to give up on GameStop and AMC. And in doing so, retail investors have been left to investigate and find the causes of why their stocks are going down despite bullish sentiment. It's a sad reality that retail due diligence is the driving force behind getting the SEC to even talk about these problems. Most likely we won't see any policy changes or fines until well after this is over and a full investigation, which could take years, is completed. Which brings me back to AMC and GME. Even though both have lost steam during the summer is notorious for being slow for trading, and with the Fed mandating preparations for a recession, it isn't a stretch to believe that both stocks will see a lot more action soon. And that doesn't even take into account the DTCC's changes. All signs continue to point to a major correction, and that encourages me to hold my shares even more. But as always, I am not a financial advisor. I'm just a regular guy with a regular job, just wanting the SEC to take action. So always make sure that you do your own research before making any financial decision, and that you make financial decisions that you're comfortable with. If you're interested in investing and need a place to start, I'll leave you some links down below that'll help get you started. Also, don't forget that you can follow us on Twitter, links down below. If you like this video and you want more like it, make sure that you subscribe to the channel. I post twice a week unless I throw in a bonus. Keep up the due diligence, be prepared for a correction, and thanks so much for being here, and I'll see you in the next one.